Hey everyone, welcome to another episode of Investing Kev. In today's episode, this episode is going to be different than my usual stock breakdown and analysis videos. I want to talk about my journey dollar cost averaging into AbbVie, ticker ABBV, from January 2019 to January 2022. I was dollar cost averaging into AbbVie before that, but I had to do a transfer from one brokerage to another and things got out of sorts record keeping wise. So I just want to start fresh when the new year came around for transparency. I want to show you how the 3 years went, a summary of the 3-year process, and I want to share the pros and cons of dollar cost averaging. These are real numbers from my account, so nothing is made up. If you like this content, please give it a thumbs up, subscribe, and let me know in the comments if you dollar cost average. Thank you for the love and support on this channel as I'm striving for 1,000 subscribers. Alright everyone, let's get started. So I want to give a quick overview. Every month starting January 2019, I invested $30 into AbbVie through my Equinity account. Any dividends received during that time was reinvested back into AbbVie. On the 15th of every month, I would have the money withdrawn from my bank account. As for when the trade would be executed, it was usually a couple days after the money was withdrawn. The reason why I used Equinity was I used to have a computer share account. I forgot exactly why I had to shift to Equinity, but I had to. This was before $0 trading fees, and this was before fractional shares were a thing. So back then, computer share offered a much more affordable option for a broke college kid. As of today, you can pretty much do this with any brokerage out there, whether it's Fidelity, TD Ameritrade, M1 Finance, to name a few. The first purchase of AbbVie was January 18, 2019, when the price was $86 per share. I was able to purchase 0.349 shares. In the next month, I received a dividend of $2.71, which was reinvested back. 2019 was a year where AbbVie share price was hovering around $80. It went as low as $63 in August 2019 and nearly $90 at the end of 2019. You can see as the months went by, AbbVie started climbing up. It hovered around the mid-90s and then surpassed $100 before the end of 2020. If you fast forward to January 2022, AbbVie was purchased at $137 per share. My $30, which was able to get 0.349 shares back in January 2019, is now only able to get 0.218 shares. 36 months later, and I want to take a look at the 3-year summary. Through the highs and lows, I kept it constant at $30 every single month. You can see the dividends climbing every single time I got a dividend payout. In February 2019, it was $2.71. February 2020, $8.73. February 2021, $15.34. And in February 2022, it was $21.97. The average share price that I invested into AbbVie was $93.52. The total shares I received was 13.261 shares. I invested a total of $1,110 in 3 years, and in that time received $130.18 in dividends. My overall average dividend yield is 6.03%. I got that number by taking the current dividend of $5.64 divided by the average share price of $93.52 and multiplying by 100. Looking at the first chart, this tracks the average price over the 3-year span. I believe AbbVie is a really solid company. I am fortunate that in 2019 and 2020, I was able to purchase AbbVie under $100 per share. And looking at the shares added chart, the triangles at the bottom are when the dividends were reinvested. You can see over time my dividends increasing, so whenever it was reinvested, I got more fractional shares. I got a lot more shares in the beginning for about 2 years, but currently it's gone down as AbbVie continues to go up in share price. This is a major thing with dollar cost averaging. Through the highs and lows, you can stay consistent and keep investing in regular intervals. This can be weekly, bi-weekly, or monthly. If I were to keep my monies on the sidelines and invest in AbbVie right now, the current price is $149.14. I would only get a dividend yield of 3.78%. What's great about AbbVie is that they've raised their dividends quite a bit over the past 3 years. Looking at their dividend history, on February 2019, they were paying $1.07 each quarter for an annual dividend of $4.28. In February 2020, it was $1.18. The total annual dividend was $4.72. In February 2021, they were paying $1.30 per share. This would have been a total annual dividend of $5.20. And right now, they're paying $1.41 per share, which is $5.64 annually. That is a 31.8% increase in a 3-year time span. This is about a 10% average dividend increase each year, which I love to see. And that definitely helps with dollar cost averaging. It helps with compounding dividends, and I don't stress over this at all. With dollar cost averaging into AbbVie, I'm on cruise control. And one thing about dollar cost averaging over time is during the downtimes, you can accumulate more shares and you can definitely see the price appreciation. I invested $1,110 into AbbVie. Right now, my 13.261 shares is currently worth $1,977. This is a gain of 78.2% over 3 years, which I am not complaining about. Profit is profit to me. All I've done is invest $30 each month, and I let this thing snowball by reinvesting the dividends into itself. Dollar cost averaging isn't for everyone, but for me, I love dollar cost averaging, and I want to show the pros and cons so you can decide what's best for you. Looking at the pros, you have a lot of flexibility. Like I said, you can invest in weekly, bi-weekly, or monthly, and the amount is flexible. Hindsight is 2020, but if I could do it all over again, I would invest $50 per month in 2019 and 2020, and then I would likely lower it down to $30. I would use that $20 difference and invest in other dividend stocks or growth stocks. Opportunity is always out there, and you can always adjust the schedule to match what you're comfortable with. The next point is that you can dollar cost average into any stock or ETF that you want. You can dollar cost average into non-dividend paying growth stocks. In the past year, tech stocks have been hammered. If I love a company like Apple, would I not be happy to be investing right now at $148 per share compared to $175 6 months ago? The next point is that you're able to purchase stocks at the lows. Like I said before, I was fortunate to purchase AbbVie at bargain prices. The prices that I bought it were in the 60s, the 70s, the 80s, 90s, and currently it is right now $150 per share. The next thing about dollar cost averaging is risk reduction. Dollar cost averaging can reduce volatility and help increase long-term return potential when markets recover. The great thing about dollar cost averaging is that you can match the market or even beat it at times. For example, if you averaged into an ETF that tracked the S&P 500 over a few years, you likely won't have suffered nearly as much pain as other investors who buy everything at the top. Also, from my personal experience seeing social media, a lot of people have lost a lot of money. This is because they've gone all in at once at the wrong times and they suffered mentally, physically, and emotionally for that. Dollar cost averaging can possibly free you from that stress as an investor and help you sleep much better at night. The next thing is discipline. I believe that dollar cost averaging can build mental and emotional discipline to stay focused over time. It is rewarding to see the growth even if it's a slow burning process. And the last thing is that you're not trying to time the market. You can smooth the investing process over time. Like I said, through the highs and lows, through the ebbs and flows, you're constant. You're in cruise control investing and you're trying to accumulate as much shares as possible in stocks or ETFs that you believe in. I want to take a look at the cons of lump sum investing. Looking at lump sum investing, it can be a better choice at times. It's hard to time the market, but if I could go back in time, I would have put much more money at AbbVie when it was $63 per share. I would have over 100% returns right now. There can absolutely be a balance where you dollar cost average, but you have cash on the sidelines. When the stock or ETF reaches a price that you've been waiting for, you can invest more money at once and accumulate more shares in a very short period of time. The next point is that dollar cost averaging can result in lower returns. Matching the market and being average just might not be for you. If you're looking for high growth and looking for hundreds and hundreds of percent in gains, dollar cost averaging likely won't be for you. The next point is that dollar cost averaging is slow, boring, and not for everyone. People's time horizons are different. I've been investing in AbbVie for pretty much 5 years now, and I'm totally fine with it. But people might not have the patience or care for what I do. 78% gains in 3 years, some people want 78 gains in a single year. My strategy won't provide that for them, not with AbbVie. So you have to realize it's not for everyone. The next point is that it is potentially risky. There will always be risk with any investment. But if you're dollar cost averaging into a poor stock, that can result in more money put into it, which will never recover. And my final point is if you're using a brokerage that charges for trades, dollar cost averaging can definitely add up in fees. It should be rare nowadays with $0 trading fees and fractional shares available, but just be wary depending on the brokerage that you're using. If you want to check out this spreadsheet, the link will be in the description box below. You'll be able to see my recently ended strategies portfolio spreadsheet and just click on the dollar cost averaging tab to view this. Dollar cost averaging is really powerful and for me it works. I am able to consistently invest in stocks over time that I believe in. My strategies portfolio is nothing but dollar cost averaging. Check out the purchase histories and you'll see the summary. You'll see the summary for my S&P 500 portfolio, my growth portfolio, my balanced portfolio, and then my dividends portfolio. My personal time horizon is 5 to 7 to 10 years out. I don't fear the ups and downs right now. I welcome it because I believe things will pay off in due time. If you like this video, please give it a thumbs up, subscribe, and let me know in the comments what you think. As always, stay safe, and I will see you all next time.